Okay guys, in this particular video, we're going to be going over Arrived new private credit fund. So Arrived Home, if you're not familiar with it, they'll let you to invest in real estate online, primary single family residence, and they also have vacation rentals. So just recently they had a single family resident fund, but they initially started with allowing you to buy single family homes, single family residential homes, and as well as vacation rentals as well. And then they started moving in more of the fun direction. But if you want to see a more in-depth video, just check the suggested videos. And also, if you wanted to see an update on my particular portfolio that I made like a month ago, just check the suggested videos. Alright, so if you see for funds, we have the single family residential fund, which is just regular invest in multiple single family homes. I did a video on that, but this is the one we're going to focus on, their new private credit fund. I'll tell you everything they need to know, and also if you wanted to watch their like an hour and 40-minute webinar, I'll also have that in the description. But if you watch this particular video, it'll tell you everything you need to know. Alright, so let's click on it. The private credit fund. So in simple terms, this allows you're pretty much providing a short-term loan for developers or people that wants to either, most of the time it's either going to do renovations, flip a house, or sometimes it may be like a short-term construction project. So what happened is you'll end up providing a loan, or sometimes they call it as short-term financing. Now I'll read out to you what they particularly have, but in a nutshell, it's a short-term loan that you'll be providing. It is a private fund, so it's not just one particular project. So there'll be several different particular projects. They'll group it into one fund, and then you'll buy the fund as a particular share. Now, in as far as the short-term financing, I believe they said they do like I think 6 months to 36 months, so it's a relatively short period of time. And they also, I'll go into a little bit of detail as far as the breakdown of the loan and all of that. But if we go to the about, it says with interest rates reaching 10-year highs, investors short-term financing for real estate projects can provide investors with attractive yield secured by quality residential real estate. The Rob Private Credit Fund simplifies and removes barriers to this investment class. So these are the highlights, targeting as far as the yield, 7 to 9% for its annual dividend. As far as liquidity, they said they will have liquidity every quarter, which means that you'll be able to sell off your particular shares. Diversified pool for real estate backed loans. I'll go over that in detail as well as far as monthly dividend payments. Now, if we look down, it says dividends. Currently, we expect to pay out dividends for the private fund monthly, with sequential dividends being paid out at the end of the month. Please note, depending on the timing of your investment, it may take up to 60 days to receive your first dividend. So that's pretty much normal. And then they go over their investing strategy. And I wanted to highlight as far as these three things. So they got the high yield, so you can expect somewhere between, they say 7 to 9% after fees and expenses. I don't necessarily know about that. What I would probably geared towards, if they say that, I would say they're probably going to give you 7% after fees and expenses. So I would definitely take the lower number. Simply because I had the platform for a while, and from what they said, their expectations from housing market did, with high mortgage rates and stuff, it kind of probably definitely had an impact on the overall property returns and stuff. But I would definitely, just from my experience of using a particular platform, I would definitely take the lower end with them. You can check the suggested videos where I got some particular properties, and you can kind of see that as well. So I want to make this clear that with this fund, you're not owning the actual property itself. So, but you're simply providing a loan. So it would come in the form of once they pay you back the interest, they the interest that they pay you was what they call the dividend. Now, this one, as far as risk management perspective, I think is pretty much interesting. So, as far as to how can I say it, safety precautions to particularly get your money back, they do, according to the webinar, they do have collateral, real estate collateral. So if the person isn't able to pay back their money, they will be able to, you'll be able to recoup your money from the residential properties as collateral. So it's, as they mentioned, loans are secured with residential property as collateral. In the event of the borrower's default, the property can be foreclosed and sold, allowing for more routes of recovery compared to investment without real estate collateral. So I will say the real estate collateral thing, that is a particular good thing. Now, in reality, you don't want it to come down to this. Hey, but I'd rather have something on paper that says, hey, they have real estate which they can sell off as collateral, because that process can take a very long time, and who knows what can happen to those particular properties. It could get vandalized. Anything particularly could happen, but it's definitely better than nothing. In addition to that, when I listened to the webinar, they also has what they mentioned, recourse loans. So that's the first time I particularly heard about that term, because I'm not like a loan expert. But when to give you a short way to describe it, it pretty much allows the borrower to go after their other assets that's not part of the collateral that they didn't put up for collateral, but allows you to go over to recoup other assets that they particularly have that's not categories under the collateral, and be recoup your money from that as well. So that's another thing, a good thing. So to have the collateral and then the recourse loan, most of the, and assuming you vetted the person, most of the time if you vet a person that have a lot of skin in the game, they have a lot of properties, it wouldn't be in that benefit to not pay off the loan. So if they did the screening process right, you have the collateral, then you have the recourse. I mean, I think that would be set up. As you can see, the total uh, asset is $2,551,310. So far, they got investors 2,181 and five particular loans. So let's scroll down, and then they just give you an example. Let's see. I want to make sure that's okay. So anticipated annual cash flow, and they just gave you an example. Okay, if you invested $10,000, just to kind of give you an example. Um, and I want to also mention this. This is also pretty important. It says first the target yield. The ROB target yield is continuously acquiring new loans that after fees and expenses that we can expect would result in a dividend rate of 2 or 3% above short-term treasury notes. So right now short-term treasury notes is like at 5.5, so they're expecting to whatever that is to be 2 or 3% higher than that. Which may be maybe very realistic. Maybe not three. I'd probably say two. But the lower it goes, it could probably aim to three. But anyway, let's go to the anticipated annual cash flow. This they're just giving an example of what you could particularly expect if you invested $10,000. So they laid it out. So okay, if you invest $10,000, earned interest, you can expect $1,090. Fees $240. Credit loss from accrual. This says, I guess since there's a fund just in case, they always have a small percentage that they kind of factor into. I think maybe 2% that I'm gonna estimate a potential loss of unpaid loans with the fund. They had put the $40 there, and then for the dividend payout of which you would receive off of that investment would be $810. Would be an anticipated annual cash flow is about 8.1%, which is solid, I think, for something like this, based off of my particular experience. If you get 8.1%, especially of a low risk that's not necessarily correlated with the market, I think that's pretty solid. So that I think I pretty much covered everything. I think I did a really good job of getting straight to the point. A lot of times, oh, let me go over the redemption process, and I kind of already, did that as well. So I'll just probably go over the redemption process, liquidity, and stuff like that. But I think I pretty much did a really good job. A lot of times I end up rambling in these particular videos, but it looks like today is one of the gooder days, better days. Anyway, but all right, so let's go to offering. So the offering, this is like the liquidity. It says liquidity. When I say liquidity, that means your ability to sell. Let's look over that. Now it says for liquidity, the Arrived Private Credit Fund has adopted a redemption plan designed to provide investors with an option for liquidity. Once the investors has held investments, you gotta hold it for 6 months. Now you have to. So after six, you have before 6 months, you won't be able to redeem your shares, which means like sell them. If approved, the redemption will occur at a quarterly end and at a current share price NAV per share. This is all pretty much standard. So now the redemption thing, keyword, you don't guarantee, they still have to approve it. So if things kind of get too rocky, you may not be able to. But generally, under normal circumstances, you should be able to. So, and these are the, I think, like the fees. I mean, for example, if you do 6 to 1 month, I think it's 2%. They're gonna charge you a 2% redemption fee. For 1 to 5 years, 1%, and more than 5 years, 0%. So this is pretty much standard from what I can see. Um, as far as like the management fees, they just kind of give you an example. Flat rate 0.10% monthly fee. So if you had $1,000 invested, it'll be a dollar a month. Okay, which you may not think that's that bad, but if you that would kind of give you I want to say annual, I believe as you talking about annual expense ratio, that can actually give you probably, I want to say like 1.20%, which could be on the higher side. But if they can end up giving that 8%, that would be uh pretty, I wouldn't be that bad. But the expense ratio would be 1.20 at the end of the year. That's because they broke it down monthly. I just times it by 12 to get that. And a lot of times these people do have a lot of skin in the game, which means they have a lot of their own money invested, so they wouldn't have a incentive not to pay off the particular loan. But I will end up purchasing one just to see how it goes and for video purpose. Now let me know it's no refund, so return to my investments. And now it's saying that I owed it, so it must have went through. Let's check. Let's see that they counted. And this is what I have so far. Let's see if they showed up. It's not showing. Wait, hold up, hold up. Oh, okay, it is showed up. It showed up, so it went through relatively quickly. But guys, that is basically it. But that's everything. If you haven't already, make sure you hit the like button. If you're new, make sure you subscribe to my channel.